Okay, so I've been asked to give you a brief or give my brief 2 cents on how the whole topic of cybersecurity is affecting not just obviously the IT space and the way we live, but also what we do from a finance perspective. So I'll just give you a boring introduction of what I do. My name is Guy Israel. I'm based out of London, and I work for a specialist credit provider. So what we do is we provide credit in for LBOs, so leverage buyouts, and we like to focus on what we call the riskier part of the capital structure, which is subordinated credit. So that's somewhere that typically used to be called mezzanine financing. It's something that lies between senior and equity, senior debt and equity. So it's very much equity light, so high risk, high reward. So how, one second, let me see, it's like, okay, so what we are roughly team of over 30 people based out of Europe. But I think the most important part of this slide is literally the bottom left, defensive. And I think this is a moving target, and this is where cybersecurity comes into play. So historically, us being a credit specialist, we're a lender, right? So we're like a bank providing a mortgage. I want safe repayment of the loans I make. And therefore, we like to focus on what we call defensive industries, which are industries that are not necessarily linked to economic cycles. So we historically have invested a lot in healthcare, and we focus, and obviously less on things like automotive and fashion retail. But the big trend for us over the last few years has been software. And the reason it's new for us, even though software has been around for years and years, is historically software, at least in the finance world, was viewed very much as startup VC type funding deals. It's only in the last few years that we've had a lot of software businesses that have been around for 15, 20 years, and they're now growing at a stage where they're anywhere with, let's say, 50 million of EBITDA, which is somewhere where we can become 50 million euros. So that's quite a big business. So this is where more and more at a quicker pace, you're seeing software businesses pop up everywhere. And I think the reason is also there's different products do different things, and all of a sudden you're seeing different companies compete in different niches. I think in the cybersecurity space alone, there's like 27 or 29 different niches, anywhere from firewall to end-to-end encryption, anything like that. So it's important to know that the niche that we are investing in, we like to understand that it's defensible and is not just some popular trend for 1 or 2 years, because that's not sustainable for us as we continue to invest. So again, it's a very busy slide, so we don't have to dwell on it. But I think what it's important to note is historically, we liked what we call defensive industries used to be things like B2B services where you have contracts with your customers. Lately, it's been a lot of subscription-based businesses in the form of schools. When you sign up to a university degree, you end up doing 3 to 5 years, so you're pretty much locked in. But more and more, and IFS is an example on that slide, you're doing businesses that are software. And the reason that they are credit-friendly businesses is their systems and services that are pretty much embedded in a customer's being, pretty much. So IFS, for example, is an ERP provider. And I think what touches on what Otni mentioned before is businesses are continuously looking to protect themselves from what they know about. But what's even harder to protect yourself is from things you do not know about. So we're seeing continuous investment in R&D from a lot of these businesses to continue to try and stay ahead of the curve and try and predict what's coming. In the example of Travelex, I don't think they knew that was possible, and therefore they had all their data and systems locked pretty much under ransom. So I think for us, it's an important point because one, potential threats are affecting sustainable businesses today. For example, there's been a number of schools, at least one I know of on the West Coast, I believe, of the US, where they had to pay a ransom of over $1.5 million. So cybersecurity is affecting existing good businesses today, and it's also changing the way they have to offer their services. The school, for example. It's also important because, look, we are doing this on Zoom. Maybe a few months ago, we might have all been in one room in the same place doing this in person. But the very fact we're all managing to continue to work and do this from home in our respective homes proves there is a potential shift in companies' business models. And I think what's actually interesting, once we hopefully come out of this, be it in the next 6 months or the next 2 years, I think it'll definitely change the way certain businesses and even industries even function. Like, who knows if events businesses will be able to operate in the same way they did a year ago. But I think what's important is that certain products will continue to be able to be provided. So online services, education services, and anything that you need to continue running your business. So, for example, we're using Zoom today, which is also still a relatively new thing for us to all be using. But as we're all working from home, and I don't know about you guys, but my employer is becoming also quite strict on privacy and things like that. So what you want to ensure is you want to ensure that all your employees are having or have an equal amount of security when they're working from home or when they're working from the office. And that's an extremely hard thing to do when we were all pretty much kicked out of the office on the same day. We were all sent home. And it's a very hard thing to put in place and then monitor when it wasn't done in stages. So I think the importance of cybersecurity for us is trying to understand how quickly is this change going to take place? How much of an investment is it from the business point of view? Essentially, how much cash flow will they have to spend to protect themselves from, one, threats, but two, also to be able to continue operating as if they were before. And that's a very hard thing to ask the owners of this business and the management teams, because right now they are obviously distracted by COVID and when we can get back to business as usual. And two, whatever our portfolio companies end up doing or whatever industry they're in, they are also probably thinking about the end customers of their own product. So a school business, for example, has to probably worry about whether its students want to come back next year or not. I think the safe thing is, from a cybersecurity point of view, is the product will always be needed. For example, let's take the worst hit industry now, which is the not aerospace, but it's the travel, let's say, right? So you take the big airliners, Emirates or anything like that. An airline like Emirates has a massive fleet to maintain. Whether or not they end up filing, whether or not an airline needs to end up filing for bankruptcy, someone needs to still take ownership of these planes, maintain the spare parts, manage the maintenance cycle of these things. So ultimately, the relative cost of an ERP system and the cybersecurity to also protect that whole infrastructure pales in comparison to what they are currently dealing with and what they are currently potentially losing in lost revenues from this whole pandemic and the whole shift to working from home for the foreseeable future. So for us, it's a very topical question, and it's one we're continuously dealing with. So if I briefly touch upon why we continue to think that it's a good space to invest in, at least in the credits for the type of businesses we invest in, you'll know if you try to save any money at your local bank account, you won't get very much. So we're in an environment of record low interest rates, and what used to be safe havens, so i.e. bonds, government bonds, are no longer yielding what they used to yield. So more and more investors are asking us, what should we invest in that is of a comparable risk that will give me my minimum return requirements I need? And the answer is, you need to find an asset class that is relatively more immune to volatility. Now, there isn't such a space that is completely immune to volatility. As you'll have seen, obviously, when this all started in March, the equity market saw a ridiculous amount of volatility. And now, actually, I should update this slide because it's probably back to where it was when we first started this for some unknown reason. But it's all about, so at least for us on the credit point of view, it's about, all I care about is getting my money back, right? So I don't mind if I make less interest than I expected to make. What's important to me is whether I receive my principal back as a lender. So what we're trying to do is manage the tail risk of businesses that end up not being able to repay their principal value in loans. And that's for us the most important thing, to be able to continue to deliver businesses that will hopefully make it out of this relatively unscathed. This is why, again, we think that the strongest credits that will come out of this are ones that, one, will be less immune, or will be more immune to the fact we're working from home, that their products are still needed. But two, from a cybersecurity point of view, is that they're still in a growing market. One, very anecdotally, one of the portfolio businesses that we're invested in is even a distributor of cybersecurity software. What turns out after we invested, we didn't even know, but we ended up, at MV at least, we ended up even using one of the products that this company sold. So it goes to show you that you may not know it, but whatever software, whatever laptop you're using at home, mobile phone, whatever browser you're using, may be protected in more ways than you know. And for us now, it's about trying to find those businesses that at least are benefiting from this trend of an increase in protection to be able to continue providing their own services. So we think it's still a good, it's definitely a focus area for us going forward. And I think just interestingly on the last slide is just at the bottom, you'll see what kind of things we've invested in. Historically, it's been a lot of healthcare, but what's been creeping up is that information technology. And that goes from below 5%, like less than 4 years ago, to over a quarter of the portfolio. And it's just as literally these businesses that, I'm not talking about the high growth software businesses that are growing at over 100% per annum. These are just consistent businesses that are able to increase prices on a good, consistent basis of a few percentage per annum because they're able to expand on their product offering. And this is really for us a target area going forward because it's, again, one of the hopefully most resilient sectors coming out of this recession, because it's going to be one very soon, but also going into the next one. We don't like to time cycles. We like to believe that whatever we're investing in will hopefully be less subject to a recession. But that's really it from my ramblings. And I think that's just a brief slide on how we do our diligence and what we typically look for in information materials. But that's it from me. So one second.